Hey traders, John Howell here. We're going to be looking at the markets. Markets are having that rally that I've been waiting for, and it's having it right now. What is going on right now in the markets? We're going to be looking at that. We're looking at gold and silver. I'll be looking at the crypto markets as well too. I'm going to show you something really interesting when it comes to interest rates. Also, the fear and greed index. It's actually making a similar pattern that it did actually at the bottom. The fear and greed index indicator. The exact same thing's happening right now that I did actually back in 2020 at the bottom of the COVID crash. So let me share this with you. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so I have a really important update for you, a quite exciting one, but also let me actually say this is sponsored by me, okay? I have 3 free gifts for the very first 20 people only. The very first thing is I'm giving away a free training to my top trading system over the last 17 years, plus 3 secrets every trader must know. Over the last 17 years, I've had to learn these 3 secrets to become a good trader. Plus also, I'm giving away a full complete trading course valued at $495. Plus also, again, for the very first 20 people only, I'm going to be personally calling you. You can book a spot with me for free, and I'm going to be building your very own personal trading plan. So if you need help with your trading right now and you need help moving forward, I'm going to see where you are, where you want to go, and then what's your overall outcome. And then I'm going to start to build you a blueprint, a step-by-step path of what you need to do to start moving forward. So go to johnsfreegift.com. Again, for the very first 20 people only, you can see all the details over there. Now, let's go have a look at the good old stocky market and mining stocks and gold, silver, and all that sort of stuff. So, a really interesting thing that's happening with the markets right now is this was expected, right? My last few videos or my last week, I've been saying, you know, the massive fear in the marketplace is likely to send this market higher. And that's exactly what we have been getting. We've started to get a bit of a double bottom in the markets. And then now see this double bottom, and I've been saying here's the double bottom, here's the double bottom, and now we're rallying up. So here's the really interesting thing about what's happening right now. Is this a significant major bottom in the markets, or is it a continuation of is it a continuation of a bear market? Right now, as we speak, there is nothing in this here to say a major bottom is in. Okay, now the big mistake a lot of people make is that they try to pick the bottom. And trying to pick the bottom, if you think about the odds, right? We're always looking for the odds because no one knows definitely what's going to happen. So we're looking for these things that give us the best chance of having a successful trade, right? Or a successful trading career. You know, and so unfortunately, most people who trade the markets, and I was one of those for the first 5 years, the reason why I lost $250,000 in my first 5 years, now, I've been doing it for 17 years. After 5 years, I started learning, and then it's been over 10 years since I've made an income from trading. Again, that's the reason why when you book a coaching call with me, I'll be able to share with you and show you what you're doing wrong to actually move forward. Again, on that free coaching call that I'm going to give away, or I'm giving away for the first 20 people. But the thing is, you can see here that we are coming back down, and a lot of people. Here's the thing, right? If you have a look at it, if you look at this from a strategy perspective in the markets. If you know that 90% of the time you're going to be wrong and 10% of the time you're going to be right, then that's just the black and white. Which one would you prefer to do? Would you rather prefer to trade the strategy that has a 90% loss ratio or a 10% win? Why don't we now doesn't it make sense to actually flip this on its head? Right now, bear with me. Okay, so this is what I'm sharing with you right now because this is the thing a lot of people are doing right now in the market. So what a lot of people do is like they 90% loss ratio, 10% win ratio. And what am I talking about here? They're always trying to capture the bottom. Oh, the bottom's in, the bottom's in. Oh, the bottom's in. Oh, the bottom's in. Oh, the bottom's in. Oh, look, 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 the bottom's in. Oh, I got it right. Maybe, right? So look at this here. Oh, you buy, right? The bottom's in, the bottom's in, the bottom's in. So here's what I'm saying here, is that a lot of people try to pick the bottom, and it's like, if you want a long-term trading career, it's just all about having 6 strategies that give you a high win-loss ratio, right? Because that's what we're after. We can't get every trade right all the time, or most of my trades are successful. Like I've had a 95% success rate with my trading this year. I haven't had a loss in quite some time. Now, I don't trade a lot. I wait for amazing quality setups. But the best thing here, right, is let's not actually fight the market. Let's actually give you chance. Let's give you the best chance of actually doing well out of the markets. If this is a 90% loss ratio, which if the market's going down, the worst thing to do is try to pick a bottom, right? Why not? Let's actually flip it on its head. Why don't we actually, if this is the 90% loss ratio by trying to pick the bottom, why don't we flip it on its head? It's like, then let's actually, if instead of trying to pick a bottom, let's actually just wait for the market to give us wait for the trend to change, and then guess what? Then we can actually start to do that, right? So this is a 90% loss ratio, and a lot of people do it. And the purpose of me bringing this up is a lot of people right now are bringing this up right now. And yes, we have a double bottom, and yes, we have this here right now, and we could even we're at a bit of a significant resistance right now on the S&P 500, but we could. This whole support level here, resistance here, so we could even get back up to here around the 4,300. The big key level, guys, remember I said before, this may be just a short-term double bottom before it goes up and then rolls over. Okay, now what is going to be the thing that we say, okay, then now what can we do to start to give ourselves a chance of hopping into this category, 90% win instead of a 90% loss? What is going to be the thing? It's going to be a trend change, okay? So don't be jumping in. Don't be trying to like all that sort of stuff. Now, this is if you're a trader. If you're trading the markets for income, you're trying to make income from the markets. Then this is what I'm talking about. Wait for the market to turn around. Okay, don't try to jump into them. Now, if you're a long-term investor, I think there's going to be amazing. A long-term investor slowly adds his way in. Okay. So anyway, investing is a completely different kettle of fish. I have investing long-term positions from now through this rest of this decade. If you want to know what they are, then for me, I think the rest of this decade, that the biggest gainers by the end of this decade are going to be metals and miners. Why? Because if we just look at simple cycles, what doesn't do really well for a while ends up doing well for a while, and that was actually doing really well for a while, or actually if we look at the last decade, okay? So if we look at the last decade, and this is how I position my investing, it just works. What was for the last 10 years, okay, from what's that there? From 2010 to 2000, from 2010, right, 2010, right, to 2020, right? What did really, 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 really well here? Okay, that's what you want to figure out. What did really, really, really bad here? This last 10 years, what did really, really, really bad? Now, let's actually bring this back to simple cycle analysis. It doesn't have to be that difficult, really. Simple cycle analysis. You look back through the hundreds, 200-300 years. So let's just say for what did really, really bad. Let's actually look at this here. Mining and metals, right? The miners and metals. So if we look at the miners and metals, and again, I'm touching on the whole investing point of view here, but if we're looking at the miners and metals, the reason why I'm so bullish to the miners and metals is one of the things is, guess what? It is all about what? It is all about cycle analysis. And what is this here? This is cycles, right? Over years and years and years. Right? And for the last 10 years, I believe this is where the miners and metals have been. They've been absolutely just down the dumpsters, especially the mining sector, right? And so therefore, what's probably going to come this decade? Now, that's why I say this decade, right? Because you never know. That's more long-term investing. You just never know where the bottom is and so on and so forth. You're not trying to pick the bottom. You're just buying good quality stocks or good quality markets, and then you're holding for that there. That's what I have. Gold and some of the gold mining stocks is what I have in my long-term portfolio right now. All right, so now that's investing, right? So I hope if you guys are more investing side where you're buying and hold, then use simple macro analysis of where we're at and to see where things are going. And then on top of all that, we know inflation is going to be here. Yes, inflation is probably going to pull back a bit, but then later this decade, inflation is going to be here for the rest of this decade. Okay, it's not going away. And so therefore I believe gold is going to have a really, really, really big play in that, especially the second half of this decade. So that's where I think really things are going to really, really, really pick up after the next recession. So we can see here the market's coming down, 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 down. We're holding support. Wait for that. Again, if we want to start if we want to start to see an upward trend, we want to start to see at least a higher low, okay? Wait for the trend to start changing. Wait for something like this, and then wait for the trend to start changing. I know you want to be, let's get in now, it's breaking up, and so on and so forth, okay? Even if you go back to the whole vid situation, look at the vid situation. When did the market really start to turn around? Look at this here. High, down, lower high, came down, lower high. Oh, look what happened here. higher low, and then look, that was the what? That was the trend change. When did it change? When it gave us this type of a pattern, a higher low. See, that may not have happened there, right? We could have just done something like that and then gone back down and tested another bottom, and you're like, oh man, I shouldn't have bought it there, and now been liquidated and all that sort of stuff, okay? So just be smart about the way that you're trading these markets. That's the reason why with my strategy, and again, I'll share with you my strategy when you go to johnsfreegift.com. I've got a whole training there sharing with you. My rule number 1 out of my 4 rules is never trade, always trade with the trend, right? Always wait for a trend, and then we establish a pattern off that. So we can see that through there. Looking at the Nasdaq as well too. The Nasdaq is actually not at its resistance level, and it's actually just breaking its double top. So there's probably more upside to come next week. Okay, so I believe there'll be more upside to come next week. We can see the Nasdaq just broke its double top, so we can see the Nasdaq actually having a more of a move to the upside, because we are bouncing off this double bottom formation and then there's resistance pattern through here. So we're probably going to get another leg up through there. Okay, but just remember, traders, doesn't mean it's over yet. Okay. Now, what would be the perfect scenario is either this: we do that, and then maybe we just go sideways for a bit, and then we start to break up like that there, or we go up, we come back down, we base for a bit, and then we actually start an upward trend. If we can get something like this here, then yes, the bottom's in. But this actually could just be, if we have a look at this here, this actually could just be what? Let me just squeeze this chart up. This could just be what? It could be just one of these things, right? Long dig down. Well, yeah, look, see this double bottom, and we have the rally, and then down we go again. Double bottom, rally, we gotta go. Are we gonna get that, or are we gonna get that? Okay, so that's what I'm saying. Wait for the market to change its tune from there, and we can go from there. So let's go have a look at there's a thing with the fear and greed. Look at this here with the fear and greed index. This is actually something really interesting to see here. So I'm looking at here, if you go to CNN fear and greed index, right, you can see that we're actually still quite fearful. There's actually still a lot of fear in the marketplace, even though we're getting the rally right now. Really, really, really interesting. So look what's happening here. We're at this 21 period, right? We can see we have this 0, 25, 50, 75, 100, right? We have all these levels through here. And you can see that generally in the time and my videos I've been doing for the last week or so, I'm saying, okay, then the massive fear in the marketplace is going to cause a rally. And that's what we're getting right now, okay? So you can see, and then there's got all these indicators through here. But if we go over here to timeline, look what's happening now. Something interesting is happening now. Let me zoom in a bit here. Can I do control scroll? That's right, control scroll. Control, and then I'm using my mouse button to scroll in, if you guys want to know what I was just talking about just then. Anyway, so you can see here, look at this here. So we actually did like, this is towards the end, right? So this is like 2020, right? Actually we can't go back to 2020. So no, it was actually the 2021 period through here, right? This is when we started to getting a lot of fear in the marketplace, and then we got this move through here, right? So I actually thought that was 2020. My bad. It was actually 2021. Or through here, look at this here. We actually got below this 25 period for a while, but then when we actually started to get back above, look what happened. We actually went for a very, very strong rally. Look where we are right now. We're still below. We're still very, 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 very below. But is this going to be a major bottoming pattern, right? Because every time we've gotten down here, it's been actually major bottoming pattern before we've actually seen a very, very strong rally out of the markets. And so we can see that through there. So it's going to be really interesting to happen. But just remember, traders, this actually could be a major bottom. And if it is going to be a major bottom, remember what I said in the first half of this video. Let's go have a look at the interest rates here. The interest rates are actually starting to roll over as well too. So that's probably going to give a bit of a buoying to the buoying. There you go. There's a new word for your vocabulary. Buoying. It's probably going to give a bit of a buoying to the overall markets. Move up and then a move down. And now we're just going sideways through here. So if we can see here, look at this here, sideways, 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 or actually, yeah, it's just going, we are starting to sort of peak out through here. If we start to have a look at these other markets, as you can see through here, we can start to see that that we are definitely sort of holding this level through. You can see on this, what's that 4-hour chart. So if we take that off the screen, we can also see, okay, you can see how this market's really holding this level through here quite nicely. Look at that through there. Let me actually bring on the 20 moving average. Yeah, that's actually looking quite strong. So if we do start just looking at this from a TA perspective, And this is interesting, isn't it? It's like people don't real. One thing, should I say, it took me a long time to figure out that I can do TA on interest rates. I can do TA on basically anything, right? Because what is charts? Charts is just understanding human behavior, and then the human behavior creates these patterns and so on and so forth. Anyway, so if we start to drop down, if we start to get a movement down through here on this 4 hour chart, guess what? This is now looking at the 10-year. Then we're probably going to head back down towards these sort of mid to low twos, right? This point down here, because the next major support level is down here. Is down at that sort of mid to two levels. And as you can see, we're starting to go down, 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 down. In fact, this is actually looking like, and in fact, you know, this is, so if we get that, this is actually a very, very, very strong pattern. And now again, what we need, traders, is we need this, okay? Is we need to get a very strong breakout bar like that, something like that. So very strong movement on the downside. If so, then that's probably going to start to have a cascading effect on the downside, which is probably going to send the stocking market to the upside. Let's go look at the 30-year to see what the 30-year has been doing. And the 30-year is pretty much the similar same thing, right? 30-year here, we have this overall support level, down, down, down. We're just going sideways through here. So once we start to break, we do have a little bit of support there around the sort of mid twos. But once we actually break, this thing's probably going to start to make its way back down to, let's see through here. So we're starting to see all this level, probably down through there. There is a bit of support there, but this looks like it's probably going to start to have a, if we do get the breaking down, then this is probably going to start to have a move to the downside around that 2.5 level, which is going to be very bullish for stocks, right? And then the last but least, I've been giving a warning sign when it comes to Bitcoin and the crypto market to not be trying to pick the bottom, because this actually could start to see a movement on the downside. And we're getting very, very, very close to a breakout. And just like with the interest rates, remember I said before with the interest rates, right? We're getting this sort of sideways period. If we continue down from here, then if we do that with Bitcoin, then the next stop with Bitcoin is down there at 20,000. Even looking at things like Ethereum, Ethereum's already making its way down. Just looking at the Ethereum price for you guys out there, guys and gals, okay, there is actually pretty strong, significant support level around, I'd have to say around that level there. So if I go back to my daily charts here, so yeah, we're getting very, very close to a support level on the Ethereum there. And looking at Neo is the one that I've been watching quite strongly as well. Neo looks like it's going to start to make its way back down. The next major support level is probably around that sort of $5 level. I would say we're probably going to get there. We may even get a flushing period there. But all these patterns here, guys, are not looking good for the upside when it comes to this. This is not looking good, and when it comes to the interest rate. So anyway, traders, hope that helps you out. Remember, traders, for the very first 20 people only, I'm giving away these three free gifts for you. So go to johnsfreegift.com, and I'll see you in the next video.